First of all, we are congratulating Mrs. Nirmala Sitharaman for presenting her 7th budget, 11th union budget in a row, surpassing Morarji Desai's 5 budget presentations in a row. So congratulations to her. Hopefully expecting lot of reliefs to salaried middle class and common man. What is the expectation from this budget of different entities and different people in this budget? What is the main expectation of these people? The budget is being looked at relief for salaried middle class taxpayers and also the common man. Section 80C, one of the expectation is the inclusion of Section 80C exemption under the new tax regime. Additionally, since the limit of rupees 1.5 lakh has not been revised since 2014, there is a request to increase it to rupees 3 lakhs to encourage savings. Standard deduction. Personal tax experts unanimously agreed that the standard deduction limit of rupees 50,000 introduced in the new tax regime last year should be increased to rupees 1 lakh. This revision is particularly crucial as the standard deduction limit has not been updated since the financial year 2019-2020. Basic exemption limit. To encourage more taxpayers to opt out for new tax regime, personal tax experts recommend increase of the basic exemption limit from rupees 3 lakhs to rupees 5 lakh. Additionally, some experts propose raising the limit for tax rebate from rupees 7 lakhs to rupees 8 lakhs. Section 80 TTA for bank interest. Tax experts believe that the current exemption limit of rupees 10,000 for interest on the bank deposits is insufficient and should be increased. Moreover, they suggest the term deposits and fixed deposits should also be included under this limit. Section 80D for health insurance. Salaried taxpayers are requesting an increase in the health insurance premium deduction under Section 80D from the current limit of rupees 25,000 to rupees 50,000 or even up to rupees 1 lakh. This change would offer relief to taxpayers and motivate them to prioritize their health, which is especially important in the present circumstances. Housing loan deductions. There is a demand to raise the current limit for deduction on interest paid towards housing loan for self-occupied house property from rupees 2 lakhs to a minimum of 3 lakhs, rupees 3 lakhs. One ask is to also to include under the new tax regime. Rationalize capital gains tax structure. Experts note that the government recognizes the interest in the current capital gains tax structure, which suffers from inconsistencies in tax rates and holding periods for various instruments within the same asset class. Moreover, the indexation benefit is not uniformly applied across different scenarios. They anticipate that the government may propose a streamlined capital gains tax regime, possibly involving adjustment to tax rates and computation methods. TCS on LRS transactions. In budget 2023, the TCS rate was increased from 5% to 20% for certain transactions to curb the outflow of foreign exchange. However, the sharp increase has had a significant impact on many individuals, including employees. The 20% tax TCS on amounts sent abroad exceeding 7 lakhs for maintenance purposes is causing substantial cash flow problems. Experts recommend lowering the TCS rate from 20% to 10% to alleviate this burden. Streamline e-filing. Experts suggest that the online grievance resolution system for income tax filing should be streamlined to make it more user-friendly. They also recommend further simplifying the income tax fulfilling process to ease the burden of taxpayers. Hopefully, Finance Minister will acknowledge all these things to the benefit of this common people and business class.